All right, guys. So I made a comment in the room. A typical day might look like more like what we had this morning, this range bound up here, right? Between this kind of 29-32 area, but market decided to make a move. So you can see here that not only did it make a move, but we kind of E2'd off of this 05 area. This was an area I marked for a potential E2. And sure enough, we're getting that divergence and it stalled out. And now we have a reversal. So we're coming back up. So we're looking for it to correct everything that we had this morning. Look for that to get erased. So what I'm looking for is basically market to come back into this zone again. And from there, pretend as if this morning never happened. So everything that we see here, yes, the support resistance levels, they'll come into play, but your guess is as good as mine, kind of like how this morning it's like, hey, we need to wait and basically do a replay. So as price comes up here, we're going to then wait to see if it's going to break up. If it breaks up, we'll look for this zone, and I'm going to use the zone because of the volatility. There's a chance that it breaks up to, let's just say 40, hypothetically, pull back down, and we're looking for a buy off at 33, but it could probe to 29. Does that make sense? And then still be bullish. So if we're above it, I'm going to look for it to potentially go as low as 28 and then still be bullish. Otherwise, if it comes up and tests this 33 and comes back down, then I'm going to see if we can get a sell side move off of it. It could be quick. So if you have an automatic take profit area preset, be okay with that because it could easily shoot down very quickly. Let's say you have a preset target at 15, it could come down, touch 15 to the tick or right in front of 15 and a quarter, and all of a sudden just shoot up. If you've been around FOMC, non-farm, you're familiar with how quickly it can move. So profit taking is something that you definitely want to do in case we get a whipsaw back and forth. It's not something that's common, but it does happen, and you want to protect yourself from that. So if you take a trade and you only walk away with a net 1 point, then don't feel bad. It's probably just the trading gods. It wasn't meant to be today. It goes back to discipline, but what I am looking for is we are above. Not only did we get some positive divergence here off of an E2, so we are getting a rally up. And then from there, we're also now holding above our red line as support. So if you want, you can look to buy this support area and then use green and orange on the way up. But what I'm going to look for is I'm going to look for it to pull into 33, kind of a mulligan, a replay, look for a sell off of that. But if it continues above 33, then I'll look for a potential buy off of this zone. Otherwise, I'm okay with nothing. I'm anticipating a move up to erase everything we just saw on this move down. Then from there, big boys are going to decide whether they're going to push it back down again or if we're going to now rally up. Maybe we get some good news off the FOMC and they decide to use that to their advantage and not only push it up to 33 from the 15, but and then some. I'm not here to try to predict what the big boys are going to do as far as getting in prematurely and hope that that's what they do. I'm going to wait and see if it gives me confirmation of which direction they're going to go. And then off that confirmation, do I get a trigger? If I don't get a trigger, then no trade. Still plenty of time for things to kind of settle in. So if you're looking for a trade right now, I would be favoring scalp buys off of 15. Scalp buys because we're still below orange, and as long as we're below orange, ultimately the direction is still sell side. But we are getting some support here off of 15, so you can use that to your advantage for a little pop-up. So try not to get caught up in between. With 15 and 20, those likely will come in play before the end of the day. But as far as an announcement goes and FOMC, if it becomes a big move, I'm going to look for sells up here around that 33. If you want to buy, you're going to be better off buying off of this 604, 605 area where the E2 formed, and there's also an E2 on the bigger picture. So because of that expectation or anticipation, I should say, of a pop up into that 33 area, it won't surprise me if we continue to grind down right now over the next 5-10 minutes, and then it rallies off of this 605, 606 area for a big push up. So just to be clear, we have a potential buy down here at 0506 on the announcement. If it cuts down here pre-announcement, probably better off to just wait for the volatility of the news. I'm looking for a potential pop up, and off that pop, I'm going to look for 33 to hold. That's what I was looking for earlier. Didn't quite get it, and I wasn't on for this announcement here. But basically, that's what I'm, same scenario as that right there. Look for a little pop up in that area, see if I can capture a little bit of a sell. If it blows right through 33, then I'll look to see preferably 5-10 point push up. I don't even care how high it goes. The bigger, the better. I'm not missing out on anything. It's as simple as if it pulls back into 33 and holds or 29 and holds, then I'll buy. If we never see one of those, I'm okay missing out on anything else. Although if we do break below 04, then I'll look to see maybe if I can get an 04 retest for a sell, but I would want to see it break pretty significantly to avoid an E1. Not one of my first choices. Overall, we're still well below 30, 29, 33, so we're sell side. So these are just some corrections that we're seeing. We'll know more on a retest of 05. So you can see we're losing some strength to the downside with 15 holding as support right now. That's why a big reason why us being above 15 for the most part, we should have stayed below 15 even on any type of rally. That would clearly give us a sell side overall continuation. But with 15 holding, that's why I'm anticipating a push higher back toward that 29.33 area. Then we'll see what the market wants to do. Not next week, the following week, the week between Christmas and New Year. It'll be spotty. Okay, this would be a buy if you want to try it here. Otherwise, like I said, we're still sell side. So it's a scalp off this double bottom. Pretty decent 10-point scalp so far. Keep in mind, overall, we're sell side. So I'd love to see 33. I don't know if it has the strength to do it. We'll see. Remember, this buy is just a scalp. Giving us a couple of re-entries off of that 04, 05 area, guys. Not too shabby for some scalping, but try not to go to the well too many times because overall we're sell side. So this thing can rally all the way up to 33 and still be sell side, but we'll see. Looking for a push a little bit higher. If you're in this, look to move to break even. If it takes you out, you can look to re-enter, but it shouldn't have any risk on the table. Beautiful retest. I'm in. Some of you guys probably already in, but I joined you on the retest. I'm going to take some here in front of 11. Move to break even on remainders because buys are just a scalp. We'll see if we can get a push up above 15 and 20. You can take some in front of 15 and 20 if you have the size to do so. Otherwise, big picture says let's look. We're looking for a correction up toward 29. Still sell side overall unless we break 33. So coming up on take some more profit, guys. So just in front of 29 is going to be your safest exit. Either that or trail it tight. Should feel pretty good about moving your trail stop to about 15.14 or even 19.20, and I'm out. Could go a little higher, but I'm done at 28, guys. How'd we do? Again, don't worry overly too much about execution. Execution will come. This is obviously could be new to most of you guys, but what I want you to understand is the concept of what I was looking at, why I was looking at that. That's more important. If you can understand that, you can then execute within that parameter. Even if you got a late fill price, a late fill price requires a bigger stop, but ultimately what were we talking about? We were saying if 05 holds with at 29, looking for the market to erase everything we saw this morning. It's pretty normal. So we were talking about a 25 point. I like to see it break a little bit higher here before we use 33 as support. It's high enough guys, to use 33 as a buy, but just understand we could probe to 29 on any pullback. So if we never got the retest of 05, this is the scenario I was talking about, is a break above and then utilizing 29.33 area as support for some buying. But notice how the market, they just shot it up to 29.33, basically erasing everything that happened this morning. And then the question was, do they resell or do they rally? And so far it's a rally. Same overpass scenario that we talked about this morning. On FOMC days, there's typically two scenarios. One, the market doesn't go anywhere and it stays kind of range bound. And then obviously it takes off on the FOMC, or it does what we saw today, either a downside trend or an upside trend, and then it erases it. And then off that erase, I call it a mulligan. It's a question of, do they touch and go for another sell? Hang on, guys, might get a buy here. Red line's already hit, so understand that you need to be a little defensive here, but 33 holding, whether it gives us a touch or E1. Remember I talked about it potentially seeing 29, so you can buy here. A little bit bigger risk, but this is a buy here at 33, 34 to the upside after a test. Again, red line's already hit. We could get higher, but the probabilities of it getting there again is a little bit lower, so you want to book some or put yourself in a free trade. About a 4 or 5 point move so far. It doesn't matter whether you get out for 1 tick or 4 points. With red line already being hit, we clearly need to get a higher high for this to continue to trend. But if there's an area that we can jump on the bus, this is it here at 33. Had to absorb a little bit of pullback. That's that overpass methodology that prevents someone from getting in a little too early. So I can't tell you whether we're going to break red line because red line's high enough. I don't know if anyone's in on this, but about 5 points to be had, or at least scaled. And then if you move to break even or a tight stop loss, it should be free, right? If you scaled for 2, you can give yourself 2 points of stop loss and still not lose anything. Otherwise, tighten it up or move to break even, you're guaranteed yourself profits. And if it breaks 42, ride the wave. How are you feeling, guys? If you're managing a trade, just ignore me until you're done. But if you're not in a trade, the biggest thing I want you to get is the concept of how the market movement I was expecting, because this is normal. Nice job, Keith. Stay above 33, we're in good shape. The question is, can we break 42? It doesn't have to. Anytime we hit red, there's a potential reset. It's not a coincidence that we bounced right off of it. A little more aggressive. I don't like it, but green line holds, you can try it. I would stick with 33. Like I said, guys, the execution, there's a reason why it's a quarterly subscription type scenario with me. Is if you only jumped in here for a month, you would just know enough to frustrate yourself. You really got to give yourself the full 3 months. Okay, anybody and everybody should be profit off the table here. If you have a runner, you can leave it, but profits should be booked here, if not already. Way back in the day, I would give people a 2-3 day trial sitting in on the room with me, not knowing any of my lingo, any of my setups. And then of course it wouldn't work out, and then they're bad mouthing me and fun stuff. Can't please everybody. Okay, look to secure up to about 40 to 42 area on your trail stop. Anything above red's bonus. You can let it ride going into the end of the day here. Now that we've broken red, there's a good chance that we'll retest it, so don't go chasing it. And then I've got 76 as our previous day high, and then another area here at 68.75. So those two areas would be where I would look for this market to go if we stay above 42. But notice I was out at 29, guys. I don't feel like I'm missing anything. I got a nice chunk. This morning. I don't need to capture every point, every tick that this market gets. I want a high probability trade, and the fact that it continues going great if you have a runner, if you are in position to leave a runner. I know some of you guys trade micros and it's great, right? There's less risk. So that runner, you leave it in there and do nothing, it doesn't really hurt you. All it can do is help you if it continues to shoot up. But even the first E1 I didn't take, if you look back here, I think it tested it, gave us a couple of E1s on that same candle because of the volatility, but this retest right there. So for those of you who are newer, it's a nice setup when the E1 happens, and if you hesitate and all of a sudden it's 5 points in your direction and you don't want to chase it, there is a chance that it comes back and test it without another E1. It can give us an E1, but that's where if you buy the retest, so planning this trade, you would then buy, either have a front run this or market order on the touch, but your stop loss just needs to be below this. As long as your stop loss is below this, you're in pretty good shape probability wise to win that trade. So anytime you miss the E1 and it starts taking off, obviously there's days where it just takes off and it never turns back and you just don't get that trigger. And unfortunately, that's just the way trading works. But if it does pull back, you don't necessarily need to wait for another E1. That break above and then the retest or the touch is a pretty common scenario, especially on the very next candle. Here, let me give you an example. It's not one of the levels, but I just want to point it out, kind of what I'm talking about. If you look down here, we have this divergence on these guys trying to hover break through this white line that I have drawn in. So notice there's E1 and then E1 by a tick lower. And then this E1, you could have lost, right? Because if your stop loss was just below this very first one, you could have lost that one. But if you missed that or got stopped out, look what happens on the next candle. The next candle comes back down and tests it to the touch. And that touch would have been your entry. So if you're super aggressive, you might get in, you might miss this E1, then you get in here, and then it's going against you. You should be safe unless you're playing it too tight. I usually go 2 ticks. So would have been safe on that one. Or if you waited here and you get in here, you could have lost depending on how big of a stop loss that you played. But that's a scenario where if this is a little bit different because it's going up when I have a bias to the downside. But if this scenario was going in the same direction as my bias, I'm not going to worry personally based on my experience that I lost this one. I get back in, I lose again, I get back in, and if I lose again, I'm 0 for 3. All right, and if I sit here and I watch and all of a sudden it does what it's supposed to do, guess what? I'm going to get back in. If I lose 4 trades in a row, let's just say average 8 points, that's very possible. It's very rare, but it is possible. But if I win and the market does exactly what I anticipate, which is if it were to hold, like right here, right? If it holds, I should see 29. Well, 5, let's just say a fill price of 5 to 29 is 24 points. So me losing 8 points potentially in this scenario, but one trade, and if I let my winner run and you're not getting out too early, you're making roughly 25 points. So in the big scheme of things, I don't let those little losses bother me for that reason. Now, if it's not 25 points, like this morning, it wasn't 20 points on the way down. On the way down, it was 14 points. And then I took a nice chunk here at 21, which is only about 7 points from my fill price. The math has a lot to do with it. So for me, looking for 8 and 14 points, I'll probably try this 1 or 2 times. But if I'm looking for 20 points plus, like on Monday, then I would have tried that trade at orange line 2 or 3 times. Now, that's me, but I also know that if I lose 3 times at 2 points each, I'm down 6 points, but that one trade for 20 points and then some makes up for it. I'm not saying you guys need to do that. I'm just giving you some insight as to why there's sometimes you're like, what for it? I'm not saying you guys need to do that. I'm just giving you some insight as to why there's sometimes you're like, what? Why did you get in there and not wait for the E1? I'm always looking for the E1, but if price stalls out and doesn't give it to me, I don't want to miss the bus. And taking a 2-point loss just to make sure that I didn't miss the bus is not a big deal to me. Hopefully that kind of gives you some insight. So again, don't worry so much about execution, but hopefully you saw what we were looking for, something that I'm always planning my trades. This trade at 05 was planned well before the announcement. This trade up here at 33 planned well before the announcement. I envision what I want to see, and the market either gives it to me or it doesn't. If it doesn't give it to me, then I do nothing. And we're getting a buy here off a red line right now. A little bit of divergence on the 2, nothing yet on the 5. Remember how we gained a little bit of choppiness through here? We had some sells, had some divergence on the 2. Maybe be a little more defensive on this buy here. We are late to the party if you are jumping in on this one. So that probe there probably took you out. That's why we want to give it, especially on these volatile times, we want to give it more time. More time you give it, the more things will just become more clear. And if it means you missed the trade, then it probably wasn't one that you should probably take as far as conviction wise, what you're looking for. For those who are newer, what I'm talking about here is when we hit red line, there's typically this type of scenario that you saw down here where it kind of goes sideways. It's trying to make a decision. You can see it tries to make a push to the upside, back to the downside. But if it's going to continue in that direction, typically you'll get more space like this right through here. So let's just hypothetically say this is the break of red line, the very first break, this 910 candle. You can see it takes some time, comes back, and then we'll get this opportunity for a sell. Now, not to say that you wouldn't lose on these 2 little pops to the upside, but that's more or less going to, what I'm trying to tell you is that if you sit there and wait, you will get an opportunity. Just depends on how long you're willing to wait versus the very next candle. If it doesn't happen on the very next candle or the next couple of candles, then that typically tells us the strength to the upside isn't quite there yet. That's why I say learn to be picky, and hopefully those of you guys who are taking the consistency training, that's what key. You don't know what you're good at, you don't know what your stats say unless you're tracking that stuff. And that's really how I came up with this whole program, as I literally tracked everything manually, of course, because I'm not very tech savvy when it comes to an Excel spreadsheet. So I'm envious in seeing you guys tracking these trades that Omega Knight is providing you guys, because mine was all on paper, notebooks and notebooks of paper. I like 33 still here, guys. It can still probe. Remember, you got to extend this guy out. It's still valid for 33, but we probed here. Volumes, we're getting these large movements, so bigger waves are expected. So anywhere between 29, 33 area if you're going to look for a buy. Otherwise, if you caught some of the run down this morning with me or caught some of this run to the upside, then I'd say go golf, but we just got a foot of snow here in Salt Lake. Here's your 33. Small risk, I would play it pretty small, knowing that it could probe. It probed here. So if you're going to jump in at 33, I would play like a 1 point risk. And that way, if you get taken out, it doesn't hurt you too much. And you can see if we get a re-entry here, just how I would play this scenario. I'm not taking anything, guys. I'm perfectly content with the initial run up. Just want to give you as much insight as you possibly can. Now, if you really wanted to be conservative, let's say this is all we get because we stalled here on the first time. Maybe we stall here a second time. If we do get back above 33, this would be your E1 trigger right now. But if you didn't love that, what's the next play? What did we just talk about earlier? If you want additional confirmation, let it push up, and it might push up 2 points, it might push up 10 points, but then let it come back and then test 32.75 on a retouch, just like we showed you down here. So there's multiple ways to enter the market even after seeing the E1. The E1 is the most aggressive entry that there is, and sometimes all that we get. But then there's the E2, and then there's along with that retest being a formation inside of that typically candle before the E2 lines up. But it's still part of that E1 trigger. You're just waiting for one little extra confirmation. So big push down and a big push up, and then now we're back in the middle of things. So unless there's something you guys see, I would stay away from this middle. It'll probably clean up, especially as we get closer to cash close, but there's nothing here now. I think it's too early. I don't I don't like that push. It's about 4 points. It's what approximately what we saw this morning, but I think we just need to give this time. It's just gonna bulls and bears. Bears retested this bottom, which we knew could potentially happen. We did get one buy off of 33 for a push up, but now we really should have stayed above either red or green or 33. Just give it a few more, let it clear, let it identify which side of the fence it wants to play on. And when I say fence, it's still this 29-33 combined. So try not to get too involved with anything in between. Basically, same thing that we were looking at this morning. We'll let it break out. And when it comes to retest, let's make sure that we stay outside of it. So you can see it kind of pushed, and that's why I said I don't like it. It's not enough. And then sure enough, we're getting pulled back in. With that, I think we'll end our afternoon session, guys. But hopefully each session you're able to take something away from it. Thanks, everybody. Have a great rest of your day.